Hey guys, hi! Today we're going to talk about something that, for some reason, many traders only remember after they've lost their deposit. Today's topic is money management. And I'll be honest with you, proper money management is just as important as the trading bot itself. You might find a brilliant expert advisor that makes super accurate entries, but if you manage your risks incorrectly, that's it, end of story. Why does money management decide everything? Imagine you have a Ferrari, that's your trading bot. But if you don't know how to brake, steer, or keep your distance, that Ferrari will crash into the very first wall, even though in reality it's an awesome car. It's exactly the same in trading. Even the smartest bot won't save you if you give it too large a lot size or run it on 10 assets without any control. That's why money management is your system of brakes, seatbelts, and airbags all at once. What is proper money management? Well, first of all, when I say proper, I mean safe. No martingale, no averaging down, no rescue grids. Those things aren't money management, they're a casino. You might win a couple of times, maybe even take profits for a few months, but then there will come a moment when the market says, okay bro, now let's play with your deposit. And that's it. One deposit gone and one more disappointment for you. Guys, I'm going to insert a little segment here where I'll show you in practice what the ratio between your trading balance and your trade size should be. These two values must be clearly and directly related to each other. The larger your account balance is, the bigger the trading lot you can allow yourself to use. Because if the ratio is not adequate or appropriate, things can end very badly. So, if you're using multi-currency trading and you have, say, 3, 4, or maybe even 10 assets being traded on your account at the same time, you see, all my trades are open on different currency pairs. This is good from a money management perspective because it's solid diversification. Even if something is currently at a loss, there are currency pairs that are generating profit. This diversifies our trading results. And considering that I use a light money management approach, I take 0.01 trading lot for every 1,000 units of deposit. So for example, if I have about 2,000 units of deposit here, then my trading lot size is 0.02. So, given that my trading lot size is relatively small compared to the balance, my maximum drawdown will be around 5%. And profitability will be in the range of 50 to 100% per year. With such conservative figures, I am completely confident that nothing will happen to my trading account. But if you, for example, increase your trading lot size substantially, then just one single trade could simply take away, roughly speaking, half of your deposit. And if you decide to set an even larger trading lot size, for example, let's say half a lot, specifically 0.5, then such a trade, especially during strong market movements, could simply wipe out your entire deposit. You don't need that. It's better to earn your profit, your 100% over the course of a year, than to risk your entire capital by making trades that might bring you a big profit for a while, but then completely wipe out your trading account. That's what this video is about. This is money management, proper capital management. And in order to manage your capital properly, you need to choose the right trade lot size. As for my products, I always consistently provide users with ready-made site files and detailed recommendations regarding what trade lot size you should use in relation to your current account balance, so that you can have many profitable trades. And even if something doesn't go according to plan, and you get, for example, here I had a loss of minus $28, I have a large number of profitable trades that will easily and effortlessly cover that loss. But if I had set a large deposit size, or rather a large trading lot size, that could have potentially caused me serious and irreparable damage to my deposit. Just instant death. Even if I actually trade with simply just one position, no more than one trade per asset, but with a large size for that trade, my deposit will simply be wiped out, either halfway or completely. This is a very strict money management system that does not forgive mistakes. You can make a single mistake and immediately lose your trading account. That's why you should simply set up a small trading account in advance. where at the very least you can carefully observe for some time how the expert advisor trades in order to see exactly what kind of maximum drawdown this particular trading lot brings you. If after watching for several months you see that the drawdown is around 5% and you are willing to tolerate a trading drawdown of 15%, which is generally acceptable, then of course you can increase the trading lot. But you should never make it large right away under any circumstances. So proper money management really means always having a stop loss in place for every trade you make. At the same time, you make at most 1 or maybe 2 trades on a single asset, and the risk for each trade is clearly limited. Only then can you say that you truly control your capital. Because if you trade without a stop loss, such trading will end in the loss of your capital. Because when the market eventually takes off, it will wipe out your deposit. If you have a grid of orders, then when the market takes off, you'll suffer a large loss or lose your entire capital. If your lot size is unreasonably large, then when the market takes off, you'll suffer a large loss or lose your entire capital. In other words, you might have a reliable and effective trading bot. But even if you break any of these conditions, you'll lose your capital. So, guys, please remember this very important point. Money management is not an extra setting, it's the core of the entire trading system. It doesn't matter how smart your trading bot is. It doesn't matter how effective its trading strategy is. Without risk control, it will blow up your trading account sooner or later. Just know this firmly and for sure. Forget about martingale and grid order strategies. That's not trading, that's a lottery or a casino. Always trade with limited risk, a clear stop loss, and no more than 2 trades open at the same time on a single asset. Only this way will you continue to remain on top of your situation and consistently be able to count on your capital growing steadily. I'm not saying goodbye, see you soon.